Welcome to your Mortgage Insider Update for this week. Excitement in the bond market as the confirmation of the crest in interest rates appears to be here. Consumer Price Index coming in below expectations, still twice the level on the core inflation at 4%, twice what the Fed would like to see, but less than 4.1% expected. 3.2% is the headline inflation number. That's all in with gas, food, energy. Gasoline prices in October did fall, giving us a little bit of assistance. So let's take a look. Consumer Price Index, October 2023, 3.2%. Year over year, that's down from 3.7%, and 0% month over month change in the headline, and a slight increase in the core inflation. We can see these numbers are highly affected by lots of different items, with shelter, rent, and lodging away from home counting for well over 50% of the Consumer Price Index weighting. So when we look at the core logic blended rent year-over-year change, we can see that rents especially have come down to 2.9% after peaking in the summer of 2022. Now, this number, as we see it comes up in the actual CPI, since it is a pretty heavy weighting, it's a 12-month lag, and we see that the CPI number shows 6.7% as the actual shelter year-over-year change that's being weighted. That's greater than 50% of the core CPI level, coming in at 4%. So now we can see that the current 2.9% rate, when averaged into the CPI 6.7% shelter cost that's counted into our core inflation number, would actually give us a real inflation number of 2.3% if we were to fast forward and use the current 2.9% blended year-over-year change in that core rent number. So as we see the cooling in inflation, we have a huge reaction on the markets today. So we're going to check out the 10-year Treasury first, and even the mortgage-backed securities all breaking through their next levels of resistance and confirming that we do appear to have seen the highest of the rates in our rearview mirror, with all forward projections for the Fed to hold tight. Their next meeting will not be until December, where we're going to get another CPI report just before their meeting, as well as November's unemployment numbers. Now, November has already started off a little slow with a 40% drop in available retail sales, holiday shopping style jobs. So think of the part-time work as 40% reduction from the height of 2021 when the highest demand was seen coming back from COVID. That has really pared back, and we are likely going to see a relatively soft number in jobs for November, but we won't get that to the first week in December. So let's look at today's charts. As we start today off, 18 basis points lower in the 10-year Treasury, 4.45%. A huge drop, confirming what we saw just this last week, with November 3rd being our response to the much lower than anticipated jobs number for October, came out the first week in November. We saw it pull back, and then we saw rates kind of hesitate coming into today's CPI number. So we can see the huge drop here. We're dropping back to levels we haven't seen since September, and hopefully we can stretch a little bit lower to get into these lower level rates, getting into hopefully low 7s, even in the high 6% range if we can get the 10-year Treasury down a little bit closer to this 100-day average, which we're still a little ways off, but with today's news and some continued positive news in the sense of interest rates response to a weaker economy, we could see this level in the coming weeks. Mortgage-backed securities find a 66 basis point improvement today. As we look at the chart, the mortgage-backed securities will work in the reverse. This is the price the investors pay. The price is rising, meaning a lower return or lower interest rate to the consumer. So as the price rises, this is our positive green candle here. We've broken above the 100-day average, taking us back to the levels of mid-September, like we said, even in the 10-year. So today was really the day that we hope to do just what we did this last week. On November 2nd, right before the jobs number came out, we confirmed and got above the 50-day average. We've stayed in this little window. Today we're breaching just above it. We need to get in this next window and stay in this better level here for us to see vast improvement on interest to the consumers on mortgage-backed securities. Encouraging news as we get to the middle of November, getting ready for Thanksgiving. Have a great Thanksgiving this next week. Be safe with your families, and get ready for a ride in December, because we are going to expect to see potentially much lower interest rates, but a lot of economic data to really give us the boost we might need in about 30 days when the Fed will meet middle of December. They'll have a lot of new data, and we won't hold our breath, but we are excited about the end of this year and into 2024. Make it a great year.